At 3:08 in the morning, a phone rings inside a locked office. 6,000 miles away, a wealthy executive has been missing for 36 hours. His driver was found beside an empty vehicle. His phone is dead, and until this moment, nobody has asked for money.
$20 million. 48 hours.
The man holding the phone wants to answer. He wants to promise everything. Sell the company, empty the accounts, do whatever it takes. But behind a glass wall, another man slowly raises one finger. Do not speak. Because the first person in this room to lose control may not be the kidnapper. It may be the person trying to save the hostage. The family will eventually ask who the man behind the glass is really protecting. The hostage, the insurer, or the market that connects them. On the table is a confidential file. It contains a 24-hour emergency number, a list of countries, a maximum financial limit, and a policy the missing man may not even know exists. Tonight, a group of criminals believes it is negotiating with a terrified company. But terror has already hired professionals. They have analysts, lawyers, crisis consultants, decades of case data, and a spreadsheet built to answer a question no spreadsheet should ever have to answer. How much money will it take to bring a human being home? This is not the story of a kidnapping. It is the story of the hidden industry that makes kidnapping negotiable. Most insurance products want to be seen. They advertise safety. They promise peace of mind. Kidnap and ransom insurance works differently. Its value depends partly on secrecy. The policy is often known as K and R. And in some contracts, knowledge of its existence must be restricted to the smallest possible number of people. Not because the product is illegal, because the product itself can make someone a target. If a criminal group learns that a company carries $10 million in ransom coverage, that limit can stop looking like protection. It can start looking like a menu. So the employee flying into a high-risk region may know the hotel, the driver, the security protocol, but not the policy quietly built around their disappearance. And K&R is not simply a bag of money waiting in a vault. A modern policy may respond to kidnapping, extortion, hijacking, disappearance, wrongful detention, an emergency evacuation, or a short, express kidnapping that lasts only hours. It can cover executives, employees, family members, sometimes even guests. The product does not prevent the worst day of your life. It pre-builds a corporation around it. One phone number activates the system. The insurer is notified. A crisis response company is contacted. Legal teams begin checking jurisdictions. The company creates a crisis management group, and the family is told to say as little as possible. This world is so confidential that nobody can calculate its true size with confidence. Commercial estimates place the insurance market in the billions. But there is no clean public ledger of policies, demands, settlements, or claims. Opacity is not a flaw in this business. Opacity is part of the product, and demand for that product is not disappearing. Control Risks says recorded kidnappings in 2025 were 60% higher than in 2020. Behind each incident is a family, but behind many corporate incidents is something else. A system waiting for the phone to ring.
You heard the number.
The company representative looks through the glass. The consultant writes 4 words on a sheet of paper.
Before we discuss money, we need proof that he is alive.
For the family, the silence feels like failure. For the room behind the glass, it is the first piece of information. Before anyone is kidnapped, an underwriter has already imagined the possibility. The application does not ask how loved you are. It asks how exposed you are. How many employees are covered? Where do they live? Which countries do they visit? How often? For how long? What security precautions exist? Has the company received threats before? And most importantly, how much money could the company or family actually access? That is how a human being enters the model. As geography, frequency, visibility, history, liquidity. The insurer is not technically deciding what a billionaire's life is worth. It is deciding how large a financial loss can be insured. But inside a crisis room, that distinction can feel almost meaningless. Some policies apply one limit to the entire incident, not to each hostage. One published insurer guide explains that the same event limit may apply whether one person is taken or 10. The spreadsheet sees 10 lives, the contract sees one event. And there is another reason the client's assets matter. The largest misunderstanding about K&R insurance is that the insurer arrives with the ransom. It usually does not. This is commonly reimbursement coverage. Under this common structure, the family or company must first produce the money. After the ransom has been surrendered, the insured can submit the loss for reimbursement, subject to the policy and the law. That means a $20 million limit does not create $20 million of instant cash. The buyer may need assets larger than the limit just to make the coverage usable. You are not buying a suitcase full of money. You are buying access to a machine that helps you survive while you try to fill it. The missing executive repeats a private phrase recognized by his family. The recording is recent. The room finally knows he was alive when it was made.
$20 million. No more games.
That amount is impossible.
Then you will wait.
The demand has not moved, but the negotiation has. Hollywood gives the hostage negotiator a phone, a dark room, and one brilliant speech. The real structure is more bureaucratic and more unsettling. There may be a family representative or a designated company communicator on the line. Behind that person may sit a crisis consultant, corporate security, senior management, legal counsel, an insurer, a broker, financial specialists, and law enforcement. Not everyone has the same objective. The family wants speed, the company wants control. The lawyer wants legality, the insurer wants the policy followed, and the consultant says the victim's safety comes first. The consultant may be the most experienced person in the building. But here is the detail most films get wrong. The consultant may not speak directly to the kidnappers. They do not storm the building. They do not investigate the crime. They do not carry the ransom. They advise the client. They help build the strategy. They study the language, timing, credibility, local conditions, and behavior of the group on the other end. One major crisis response firm says its proprietary database contains details from more than 71,000 kidnapping and extortion incidents. For a given location, analysts may examine which groups operate there, how long cases tend to last, and what concessions are typical. The criminals have a hostage. The room has data. In finance, the criminals would be called a counterparty. Here, the counterparty has a human being. And this is where the family's nightmare collides with the logic of a market. If you pay an extreme demand immediately, you may not simply lose more money. You may confirm that more money was always available. The demand may rise. Other executives may become more attractive targets. And tomorrow's kidnapping may begin at the price you agreed to today. Researchers call this ransom discipline. To the industry, controlling extraordinary payments helps prevent ransom inflation. To a family watching the clock, it can look like strangers are bargaining with someone they love. The family measures time in heartbeats. The professionals measure it in signals. That conflict is not a side effect of the system. It is one of the most difficult things the system must control.
$12 million. Final.
The representative covers the microphone. Behind the glass, nobody speaks. The consultant slides a note across the table.
I cannot authorize that.
20 million has become 12. Nobody in the room celebrates. Because a lower number is not the same thing as a safer hostage. The ransom is only the most visible number. Open the policy, and the crisis begins to look like a profit and loss statement written in human suffering. There may be coverage for the independent negotiator, the interpreter, legal advice, public relations, medical treatment, psychiatric care, the victim's salary while they are missing, the lost wages of a relative helping with the negotiations, child care, temporary security, a replacement employee, interest on a bank loan taken out to raise the ransom, even the cost of bringing remains home if the negotiation fails. K&R Insurance does not merely price freedom, it prices the damage surrounding it. And then there is one of the strangest clauses in the entire business: lost ransom. If the money is damaged, seized, stolen, or disappears while being transported to the people demanding it, some policies can reimburse that loss too. The hostage is insured, the crisis is insured, and for a brief period between the bank and the kidnappers, even the ransom can become a hostage. This is why K&R is not just insurance. It is an emergency supply chain. Someone has to assemble the funds. Someone has to verify them. Someone has to determine whether moving them is legal. And someone somewhere must cross the point where the regulated economy ends.
We cannot access 12 million.
How much can you access?
The representative looks behind the glass. The finance team has spent hours examining accounts, credit lines, and what can be moved without destroying the company.
3.
Then find more.
The negotiation has reached the balance sheet. A ransom does not teleport from a corporate account into a jungle, and it does not always travel as cash. Published policy language can define ransom as funds, monetary instruments, cryptocurrency, securities, property, or even services. But physical cash creates the most cinematic and dangerous problem. It is heavy. It must be counted, transported, protected, and delivered to people who cannot issue a receipt. The final handoff may happen on a remote road, on a vessel, through an intermediary, or in a form that looks almost impossible. In 2009, after Somali pirates held the Saudi supertanker Sirius Star for nearly 2 months, a reported $3 million ransom was parachuted onto the vessel. The ship and its crew were released. Then, in a final reminder that this market never becomes orderly, 5 pirates reportedly drowned when their small boat capsized as they left with part of the money. The insurance system can model the risk. It can hire experts. It can reimburse the loss. But at the final mile, the transaction still enters a world without contracts, courts, or guarantees. Paying does not force a release. The kidnappers can take the money and demand more. They can disappear. They can kill the only witness. So why does a commercial kidnapping have any chance of ending in an exchange? Because even criminals can depend on reputation. A group known for releasing living hostages after payment makes future families more willing to negotiate. A group known for breaking every agreement destroys the value of its next hostage. The darkest stabilizing force in this business may be the kidnapper's desire to remain in business. But before any money moves, the room must answer a more dangerous question. Who is on the other end of the phone? Paying an ordinary criminal group may be legally possible depending on the country and circumstances. Paying a sanctioned or proscribed terrorist organization can be a crime. In the United Kingdom, the law explicitly prohibits an insurer from reimbursing a terrorist ransom when it knows or has reasonable cause to suspect where the money went. Similar sanctions risks exist in other jurisdictions. So while the family is asking whether the hostage will survive, lawyers may be asking whether saving them in this way could finance terrorism. The policy may be valid. The limit may be available. The money may exist, and the payment may still be forbidden. That creates an almost impossible collision. The emotional clock says now. The financial system says verify. The law says stop. And the kidnappers do not wait for a compliance meeting. This is the point where insurance reaches its limit. It can transfer financial risk. It cannot transfer moral responsibility.
$5 million. Tonight.
The representative closes his eyes. The consultant behind the glass places a final note against the window.
3.4 is everything we can produce.
We call again in 1 hour.
Now pull the camera back. The man holding the phone is not the master negotiator. He is the voice selected to communicate. The professional has been behind the glass the entire time, listening, analyzing, advising, never speaking directly to the kidnappers. The kidnappers thought they were negotiating with one frightened man. They were negotiating with a system. But the final question is not where the professional was sitting. It is who he works for. He was activated through an insurance policy, but published industry guidance says the response consultant is independent of the insurer. He advises the client. He does not act as the insurer's agent, and his stated priority is the victim's safety. That firewall matters. A terrified family needs an advisor, not a claims adjuster bargaining against it. Yet, the strategy can still protect the larger system from uncontrolled payments, inflated demands, and the next kidnapping boom. That is the uncomfortable genius of K&R insurance. It does not eliminate the market for kidnapping. It tries to govern it. Insurers and crisis responders harden targets before an incident. They organize the response after one. They impose discipline on negotiations. And by making a living hostage more valuable than a dead one, they can create an incentive for criminals to limit violence and complete the exchange. Critics see the opposite. If insurance makes ransom affordable, does it also make kidnapping profitable? If every payment funds the next operation, is saving one person increasing the danger to another? Insurance calls this moral hazard. Here, moral hazard has a pulse. The industry's answer is that unmanaged panic produces larger payments, more violence, and more attractive targets. The critic's answer is simpler. Without money, there is no market. Both can be true. And somewhere between them is a person waiting in a locked room, unaware that their freedom is being discussed through policy limits, historical data, legal screens, and available liquidity. The insurer does not officially decide what that person is worth. It decides what financial loss it will cover. The consultant does not officially negotiate the cheapest life. They advise on the safest resolution. But at 3:08 in the morning, with a demand on the phone and a number on the glass, those distinctions become painfully difficult to see. Somewhere tonight, another phone will ring. One side will make a threat, the other will open a file, and between them, the price of a human life will move. Not on a stock exchange, not in a courtroom, but inside a market that survives because almost nobody admits it is a market. Does Kidnap Insurance rescue people from the ransom business? Or is it the hidden infrastructure that allows the ransom business to function?